In this video, we're going to talk about SoFi and when they reported their earnings back on January 27th. The report resulted in strong results and a full year GAAP profit they announced for the first time since going public in 2021. However, the news caused the price to drop. You see, investors' reactions to the forecast for the year was mixed, as the company planned on investing more in growth initiatives. Now price finds itself just hovering over this daily buy level, which is no longer fresh, meaning if you look to the left, you have two levels. You have a rally, a basing candle, a rally, basing candles, and then the rally out. So this is what I call a level on level. And typically when you have a level on level, you typically want to go long right in the middle. So if you were to put your entry at about $14, you put your stop just below that pivot low. You would have had a nice roughly 3-to-1 reward to risk ratio. However, like I said, these levels are no longer fresh, meaning when the levels were formed, price dipped its toes not once, penetrated the zone deeper a second time, penetrated the zone even deeper a third time, penetrated the zone pretty much at the end of the second zone on the fourth time. So in theory, there are no longer any remaining unfilled buy orders. However, if today is any clue, we did gap down but finish off the lows. We could have still some buyers remaining at these two levels. We'll call that 1375. Now stay tuned to the end. We're going to see where price can get to from current levels after we go over this article. And it's coming from the Motley Fool. So SoFi recently announced its earnings, closing out an impressive year for the company. The fintech exceeded earnings expectations with the fourth quarter revenue reaching $734 million, which surpassed analyst estimates. The significant factor in SoFi's recent success is its acquisition of Golden Pacific Bancorp in 2022. This strategic move granted SoFi a banking charter, enabling the company to take in deposits and hold more loans on its books. At the end of Q4, SoFi reported nearly $25 billion in deposits, an increase from $17 billion just a year prior, and up significantly from $5.9 billion at the end of 2022. This impressive growth in deposits reflects the company's aggressive approach to attracting customers on its platform. Net revenue for its lending segment was $1.49 billion, while contribution profits was $891 million, representing an 8% increase from the year ago period. Contribution profits is a metric used by management to evaluate the profitability of individual business segments. Last year, SoFi was focused on boosting its capital base. This year, CFO said, "We want to better tilt our incremental revenue growth towards investments." He later on went on to say, "We have significant untapped addressable markets in front of us, and we have proven that the more we invest, the more we produce durable growth and strong results." Now, valuation standpoint, stock is pricey, trading at a forward 1-year price to earnings ratio of 41 and a price to book ratio of 2.8. That said, its recent revenue and earnings growth, and future growth opportunities make its high valuation more justifiable, making any dips in the stock a good buying opportunity for aggressive long-term investors. So are you an aggressive long-term investor? If you are, well, you go long now and you put your stop at $13. So you're looking at a $2.40 risk. Now let's pull back to the weekly chart. And let's see where price could potentially head next. Again, got the nice bull flag. Got the breakout, the retest. The charts are suggesting your next target is going to be this $20 level after price closes above the $18 level. We are in a risk off environment, although it may seem in recent weeks we are in a risk on environment, but the economy is still doing good, and SoFi is in growth mode. Again, look for your next target coming at the $20 level. Thanks for watching. Subscribe. Please like the video.